There are a lot of terms that get thrown around in real estate, but you probably don't know what all of them mean. It's always helpful to have some knowledge when you're going through a transaction as big as a real estate deal. Today, we're going to go through some common mortgage terms that come up during real estate transactions so that you're more prepared when it comes time for you to move. Hi, my name is Tyree Schaefer, and these are some common mortgage terms that come up during real estate transactions. The first two terms we're going to look at are principal and interest. These are basic terms that are going to refer to the money you owe back to the lender. Principal is going to be the amount that you actually borrowed from the lender. So if you took out an $800,000 loan, for example, $800,000 is going to be the principal. Interest, on the other hand, is the amount that the lender is charging you to borrow those funds. So together, principal and interest make up the total balance that you're going to owe back to the lender at the end of the loan term. Our next term is a fixed rate mortgage. This is probably what you think of when you think of your standard 15 or 30-year mortgage. Fixed rate means that you'll have the same interest rate for the entire life of the loan, so your monthly payments will be equal until you finish paying it off. These types of mortgages have the most stability for customers when it comes to interest rates, so they tend to be popular. On the other hand, we also have adjustable rate mortgages, or ARMs. With this type of loan, you have an initial interest rate that's fixed for a specified period of time and then changes periodically afterwards until the loan term ends. For example, a 7-1 ARM has an interest rate that's fixed for 7 years and then is changed every 1 year after that. As you can see, the first number before the ARM tells you how long the initial rate is going to be locked for, and the second number tells you how often that rate is going to get changed. Both of these time periods can vary, so talk to a lender and they can tell you what options they have and what will work best for you. It's also good to note that initial rates for ARMs are usually lower than those for fixed rate mortgages. This is because after the initial period, ARMs will change with the market, so lenders can be a little bit more lenient with the initial rate. With fixed rate though, they won't change throughout the life of the term, so lenders have to take into account long-term market changes and usually give a higher interest rate. Our next term is amortization. This basically just means that you're paying your loan in installments. So rather than paying off a $500,000 loan at once, you can pay it back in smaller payments throughout the life of your loan term. There are different types of amortization though. One type is full amortization. This means that the loan will be completely paid off after all of the monthly payments have been made. For a fixed rate loan, as we mentioned, all of the payments are going to be equal throughout the life of the loan. For an ARM, the payments are equal for as long as the rate is fixed. So your payments for the initial period will all be equal, but they'll change every time your rate changes after that. That way, your loan will be paid off by the time you've made all of your monthly payments, but they'll only be equal for each separate period of time. Another type of amortization is partial amortization. And this means that your monthly payment is only going to cover part of the balance, so you'll be left to pay a final balloon payment at the end. What a balloon payment is one large payment that covers the rest of the balance that your monthly payments didn't. This can happen, for example, when you have an interest-only schedule to pay off your loan and your monthly payments are only going towards interest. In this case, all of the principal balance is still have to be paid off at the end of the loan term. And as a result, you have to pay that final balloon payment to settle the loan. At this point, you might be wondering who wants that type of loan. And this type of amortization is actually used a lot by investors who plan on making a lot of profit during the time they own the property and will therefore be able to afford the balloon payment when the time comes to pay it. But this is definitely not the best move for every type of borrower, so if you're considering it, it's best to talk to a lender first. Next up are a few terms related to your credit. The first is a credit application. This is the form used by lenders to obtain your personal, financial, and credit information to determine whether you'd be eligible for a loan. Some of the information they'll be getting from you is the type of loan you're interested in and any employment or income history. Another item related to your credit is a credit report. This report can tell the lender almost everything they need to know about your credit history. It contains information about your identity, any outstanding court actions, and any previous inquiries into your credit. This report can also tell lenders how often you've made payments on time and whether there's any outstanding payments you haven't made yet. And of course, one of the most well-known features of this report is your credit score. This number is usually between 300 and 850, and it tells the lender how likely you are to repay your loan. This number is determined by a lot of factors that include your payment history and the length of your credit history. And the higher the credit score is, the more likely the applicant is to pay that loan back. Because of this, people with higher credit scores tend to be eligible for more loans and can even get lower interest rates on those loans. That's all for this video, but please keep an eye out for part 2 where we'll go over more mortgage terms and what they mean. If you found this information helpful, I'd appreciate you liking the video and also subscribing to the channel for more real estate content. As always, if you have any more questions, feel free to reach out to me through Instagram or email. They're both linked down below, and I'll catch you in the next video.